Meantime, last week we saw the failure of First Rand's negotiations with Merchant Bank Ghana, that for a 75% stake in the company. Now, this unsuccessful bid comes after First Rand ended talks to buy Nigeria's Sterling Bank in 2011, that as the parties were unable to agree on the terms of that deal. Now, the latest events raise questions about First Rand's capability to bed down a suitable transaction in any African country. To unpack some of the reasons for this and look at the opportunities that West Africa presents to banks, Rele Adesina, Head of Research at Stanbic IBTC, joining us from Nigeria. Rele, thanks for joining us today. So let's specifically look at what's taken place with First Rand, because that failed attempt to buy Sterling Bank in 2011 was said to be as a result of not being able to agree on a price. The deal said to be valued at the time at $400 million. The bid to buy into Ghana appears to have lapsed there, that with Merchant Bank. Can you pin down their inability to bed down an acquisition in West Africa to any one factor?
Hi, Samantha. I think that the key thing really with South African banks expanding outside of their home base, Standard Bank obviously, led in that regard, and I think there's a perception that the price that it paid for its own foray into West Africa was rather rich, and so as a result, First Rand in its outing has kind of been emphatic about its desire to ensure that it strikes a deal at the right price. And on the other hand, I think we have a situation where potential targets have seen the precedent that has gone before. Let's not forget the Standard Bank's transaction was really very much at the height of the market in 2007. Or at least at a very high point and very high multiples. So the targets also similarly are looking for attractive valuations. And given all of the noise that is around West Africa and around players wanting to enter that space, perhaps perceive that they won't be short of suitors and can therefore afford to hold out for the most determined potential acquirer.
So the targets, one might argue, perhaps are being a little bit too greedy, but this is, supply and demand factors playing into this ultimately. Are there global banks that you see looking at Nigeria right now? Do you see that Nigeria is set for perhaps a period of acquisitive growth for key global names?
I'm not sure that global players, like your sort of HSBCs and the like, are looking as keenly at this market as the South African players right now. Obviously, Barclays is somewhat different, and through ABSA, we should probably see some attempts to expand footprint there. But they have an established Africa strategy as it is, so it's not a novel move. But in terms of guys that are relatively non-present or green in the SSA space, I'm not aware of global banks looking to push in. But I think that First Rand has been consistent in its commitment to want to expand into sub-Saharan Africa, and I guess even if it has to go back to the drawing board and review its parameters, I should imagine that something will get done eventually.
I mean, management continually highlights how they want to get exposure in West Africa. They've already got their RMB brand operating there, so investment banking operations. But I mean, does First Rand have the luxury of turning its back on Nigeria, or do you think that the opportunity cost of not getting exposure in Nigeria is just too high for it?
I think that for any bank that wants to be dominant on the continent, Nigeria is sort of a necessary destination, and I don't think any such bank is under any illusions about that. I guess the reality is that doing a greenfield operation is also challenging, will probably also be slow and take some time to deliver returns. But paying a sort of a large number to make an acquisition in one go is kind of a big headline, and I think that the having to please shareholders, having to sort of reassure shareholders that any such sort of expansion strategy is not going to be done recklessly. In an environment where it's perceived that perhaps some of its peers may have done exactly that, or at least been a bit too zealous in terms of what they're prepared to pay, just makes the situation a little bit more difficult. But I think ultimately, if a sub-Saharan African strategy is what they seek to do, then they will have to come to some kind of middle ground, both with shareholders and potential targets, and in getting that done.
I mean, what type of options are we looking at right now in Nigeria for the likes of First Rand from a retail banking perspective? Because we know, that the crisis meant that there was some consolidation, of course, and we've still got these 3 AMCON-owned banks, which we know have for sale signs there. So give us an idea of what the options are, given the universe right now is 21 banks.
Well, I think, yes, the 3 AMCON-owned banks are, of course, available for sale. That's been made quite clear. I guess it's a trade-off between, I should imagine that, the ideal thing is to have a landing strip, into the market on a platform that is sizable enough to be able to have an impact, but not so big and unwieldy that you can't trim it and adjust it to suit whatever strategy, the acquirer desires to execute. So I think, you're either looking at the AMCON banks, which are of reasonable size, although the question really lies in what kind of franchise you're actually buying, because I don't believe anybody really wants to buy bricks and mortar as much as they want to buy customers and staff and sort of local knowledge. So there's that option, or I would imagine a sort of a medium-sized bank is kind of more plausible. It's not so large that there'll be a challenge to maybe steer it in terms of culture, but it's large enough. And the fortunate thing is now that where the sector is in the cycle, we've just gone through a significant cleanup. Balance sheets are in reasonable shape. There shouldn't be too much in terms of skeletons in closets and so on. Asset quality is at a reasonable place. Capitalization generally is at a reasonable place. Any kind of medium-sized landing strip, bank rather, should be a reasonable landing strip from which to begin to execute a strategy in Nigeria and perhaps further into the region.
Well, the market in South Africa, really, and just giving the numbers here, has now closed flat, 40,740 points. Just before we end this off, really, we've got, of course, the 4 big banks all trying to get exposure. We know Stanbic IBTC has the exposure in Nigeria right now. Nedbank ultimately would have it if it exercised an option to buy that stake in EcoBank, ETI essentially. First Rand's trying to get in there. We know that Barclays, of course, also trying to get more exposure. So who's of the big 4 banks, which do you see as benefiting the most from the growth in the Nigerian economy?
Well, I suppose in terms of presence and commitment, Standard Bank obviously has gone the deepest compared with the operation that they purchased and the platform that they now have versus any of the other banks that you mentioned. I think undoubtedly Standard Bank has demonstrated the most commitment and has gone in the deepest to this market. But the point is that the market's development is still early, and I don't think it's too late for new entrants. Nigeria is kind of unique in the sense that of many of the markets in Africa. I mean, if we look at Ghana, if we look at Kenya, smaller markets that are, have a very strong presence of foreign banks, Nigeria really doesn't have that. But in terms of the market's development versus the opportunity, I think that it's still very much at an early stage. So Standard Bank clearly is furthest ahead, but the market is still early in terms of its development, I would say.